What's up, guys? This video is going to be on risk management. I'm not going to go over how to use the TradingView calculator or anything like that. I'm just going to be going over how I personally manage my risk when trading to minimize the amount of losses I have and maximize the profit. So let's get into it. For this first example, the close is right here, inversing the fair value gap. So that's where my entry would be. And the first thing I'm going to go over is a stop loss. Now, what some people will do is they'll put their stop loss here at this swing low, but I don't like to do that. I personally close my position after we close below this fair value gap. So if we inverse the inverse, right? So this is a long. So if we close below this fair value gap, then I'll close my position. So what I'll do is based on like the way that the candles are right now, the volatility, I'll estimate a stop loss. So I'll estimate my stop loss about like right here. And normally what I do is I round up. So this is 78, I'll put at 80. So this is my estimated stop loss. So I'll risk like a little bit less. So if it closes down here, then I don't lose more than I intended. And then if it closes above, I save myself some money. So right here, that would be the stop loss. And now what do I do for take profits? So my take profit would be this liquidity. This is the first internal liquidity that we have. So that would be a take profit of 1.6 risk reward. And then what I would do for my full TP would probably be right here. You could hold it for up here if you want to. Like this. You could hold it for up here if you wanted to. But the difference between this is 3.3 and 3.9. So you could. That's a decent difference. But this is how I would do this trade. Right? So, and now for the entry. Let's say I was trying to risk $1,000 on this trade, right? Say, for example, $1,000. Let me see how much 3 contracts is. If we enter with 3 contracts, okay, it's about 1,000. But like I said, I try to do a little bit below. So I would enter with, let's see how much 2 contracts is. If we were to close here, that's 800. So perfect. Our stop loss is a little bit below 1,000. Which is how much we're willing to risk. So for this full TP, I'll put it up here where my full TP is because I put all of my take profits at some form of liquidity and I try to get a good risk reward, right? If I were to put my full TP here, it's 1.6. I would rather try to get something a little bit more, and this is 3.3. So that is what I would do taking this trade. And the last thing is, where would I put my break even to? Where do I put my stop loss to break even? I would personally put it here because we did inverse this fair value gap, but this fair value gap right here could get rejected. So what I will do is after we enter this fair value gap in this candle, I will move my stop to break even, right? After we enter that fair value gap. So I'll enter here with the 2 contracts and we'll see what happens. So now here you can see we touch this. Now the stop loss is break even because we don't know if we're going to reject this fair value gap or not. Now you can see here, right here, we do touch take profit 1, right? So what I'll do here is I'll close out one of my contracts. So now we have secured some profit and we have our stop loss at break even. So we've guaranteed some profit and we can no longer lose money at all. So this is now a very safe trade considering we've already made money. So if it does go back down, we still made money. Now let's watch what happens. We came closer to the second take profit, but we didn't hit it. And now what we noticed is we created this new liquidity here, right? So what you could do is now your full TP, instead of it being up here like this, you could actually have it right here, right? You could move your TP here. This is what I would do after I see this new liquidity being formed here. You could, depending on how many contracts you have, you could scale some out here or make this your full TP. And then we'll see what happens. We get a big retracement. This retracement could be explained just by looking on the 2-minute. We have this fair value gap here. So we retrace to this fair value gap. But we'll see what happens. And it comes up and takes this liquidity and then goes back down, right? So it did hit full not technically the full TP, but it's a winning trade. And you can see if we play it out, it does hit full TP right here. So if you were to have left it, you would have been fine. But it's all up to you depending on how many contracts you have. You could scale out here. You could have made this your full TP, or you could have just not done anything. You could have just left it all the way up here at your full TP and just let your trade either go break even or full TP. It's up to you on how you want to manage your trades completely, but I'm just giving you advice on how I manage my trades. And with that being said, we'll go on to the next example. Now with this example, it is another long. The stop loss again could be a swing low, but I personally would rather leave it here and put it where I guess it could close. I would put it like right here, 90, maybe even 95. So if I wanted to risk $1,000, let's see how much 2 contracts would be. 2 contracts would be perfect. 950, that's a little bit less than 1,000. So for good risk reward, we could look at this take profit, or we could look for these equal highs for a full TP. So the way that I would do this is I would put the full TP up here at 2 risk reward, and break even would be right here because the risk to reward to this is horrible, 0.7. So this would be break even, this would be TP1, and these equal highs would be the full TP. So we'll do TP2 or TP2. And then this will be break even right here. So let's see if we enter with 2 contracts right here, we instantly move our stop loss to break even, right? And then on this next candle, we get to close 1 of our contracts with a stop loss at break even. So now this is guaranteed profit and risk free. Now let's see what happens. Let me put the TP up here. All right, let's see. Now we did just create this. So if you wanted to move your TP, you could. But in this situation, I wouldn't, considering how close they are. And these are also equal highs. So it is a strong draw in liquidity. So I would just leave it. And you can see right here, we get stopped at break even for a partially winning trade, which is why we moved the stop loss to break even. We already have some profit from taking partials at this internal liquidity, right? And we do come down and take out this sell side right here. And the main reason why this failed is because we also have some relative equal lows down here. So this was the draw on liquidity, not the equal highs. But it's okay because we took partials at this internal and we got stopped at break even. So even though this trade didn't fully hit the full TP, we still have some profit, which is the main reason why I like to manage my trades like this. Now with this example, it is also a long. Most of these examples are longs. I'm not entirely sure why. I'm just picking out ones that I feel like emphasize it very well, so it's obvious and you guys can really understand it better than if I were to show very like weird situations. But you can see here the stop loss again. I don't do a swing low, but you could put the stop. I would put the stop loss anyways right here at 40, because again, like I said, I like to round up, and the candles seem like based on this volatility it could close down here, so I would just put it right here. And if I wanted to risk 1,000 like I've been doing for the other examples, let's see how much 3 contracts is. It's 600. So let's do 5 contracts. Let's see how much 5 contracts is. We enter, and that's risking exactly 1,000. So that's okay. We could go with that. If you wanted to risk a little bit less, like I said, because it could close below, you could do 4 contracts instead. Now let's see. What would I target for my take profit? I would do this. What is the take profit on this? This is 1 risk reward. So you could do TP1 and break even right here. Right, TP1 and break even right here. And now you could look for some liquidity from the left over here, but it seems like it's just fair value gaps. So you could put 2 for a TP2. Just do 2 risk reward like I drew out for TP2. And let's see what happens. This next candle doesn't seem like it's going up. All right, let's see what happens. We create this new high, which would be the new break even, but it doesn't matter because you can see right here we closed below. So now I close my position, and you can see that would have been a $600 loss instead of the 1,000 that I started with, right? I was willing to risk 1,000, and you can see this close below saves you, and now you only lose 600. And let's see how it continues. You can see dumps down here. So even if you had your stop loss at the swing low, you still would have got stopped out, and you can see that it dumped down here. So you just turned risking $1,000 into a $600 loss, and that's another way that I keep myself from taking big losses. And the reason I showed this is because if I only showed wins, then it wouldn't show you guys what to do in the situation where you guys do have a losing trade. And I felt like that is something very important to show. And that's going to be it for this video. And if you guys learned anything, please make sure to leave a comment. And if you guys have any suggestions, also leave a comment. Please leave a like, and I'll see you guys later.